Let's talk about Queens, because the real estate market there is, well, it's a fascinating mess right now. You've got this huge influx of homes for sale, which sounds great for buyers, right? But at the same time, prices just keep ticking up. It's a real balancing act. So what's actually happening? Let's dig in. So get this. The number of homes for sale in Queens? It's up 38%. I mean, that's a massive jump in just 1 year. That's not just a small shift. It's a genuine game changer that's completely reshaping the landscape for anyone looking to buy or sell. And this right here, this is the core of the whole story. On one side, you, the buyer, have way more options than you've seen in a very long time. But on the other side, those price tags are still pretty painful. It's this constant tug of war, and honestly, it's not obvious who has the upper hand. Okay, so first, we're going to look at this market in flux. We'll unpack this whole battle between the growing supply of homes and those costs that just don't seem to want to come down. Then, we're going to talk about what all this really means for you if you're out there trying to buy a home, because that 38% jump, it's giving you some serious new leverage. Let's see how. Let's talk numbers. The median price for a home in Queens right now is $775,000. Yeah, and even with all those new listings popping up, that number is still climbing. That's a 5.4% increase over last year, which is, pretty significant. But here's where the story gets interesting. There's a twist, and that twist is actually creating a pretty big opportunity for buyers. Check this out. Back in the summer, it took about 75 days to sell a home. Now, it's taking 88 days. That might not sound like a lot, but that's almost 2 extra weeks. It's a clear sign that the market is cooling off, giving buyers some much-needed breathing room. So what's the bottom line here? It means buyers are finally getting back in the driver's seat. You've got more choices, the frenzy has died down a bit, and that means you actually have some real power to negotiate. The tide is definitely turning. All right, let's pivot for a second. Let's talk about where the big money is going, because investors are looking at a totally different picture. The commercial real estate scene in Queens is, well, it's on fire, and it tells a whole other story. This little table here says it all. Just look at multifamily and industrial properties. Vacancy rates are incredibly low, 3 and 4%. Rents are going up. Retail is pretty healthy too. But then you get to office space, a 13% vacancy rate. That's the post-pandemic work-from-home world staring us right in the face. And if the table didn't make it clear, this chart really hammers it home. I mean, look at that difference. That huge bar for office space next to those tiny little bars for industrial and multifamily, it's basically a giant flashing neon sign pointing investors exactly where to put their money. And it really is that simple. Think about it. People will always need a place to live. And with our online shopping habits, businesses will always need places to store and ship goods. That's why multifamily and industrial properties are seen as such a stable, smart bet for investors right now. So you have to wonder, what's actually fueling all this activity in Queens? Let's pop the hood and take a look at the powerful economic engine that's really driving the borough forward. At the end of the day, it really comes down to jobs, and Queens has them. We're seeing huge growth and really solid, high-paying industries. Think healthcare, transportation, and even tech. More good jobs means more people wanting to live here. And all those people need a place to call home. It's Economics 101. And you can bet developers are paying attention. The number of permits for new residential construction has shot up by an insane 43% in just 1 year. That is a massive vote of confidence in the future of Queens. And it means a lot more housing is coming down the pipeline. Now, this building boom isn't just happening by magic. It's actually being turbocharged by government policy. We're talking about major zoning reforms like City of Yes, which make it easier to build, and new tax incentives like 485X, which specifically encourage rental construction. It's a full court press to get more housing built. So, the big question, where does all of this go from here? Let's peek into the future, look at the forecast for early 2026, and break down what it all means for you. Okay, here's the expert take. For homebuyers, the good news is prices are expected to finally level off while inventory stays high, so you'll still have options. For investors, multifamily and industrial, still the gold standard. And as for office space, well, it's slowly crawling back, but it's going to be a long road. So let's boil this all down. What do you need to know? If you're a buyer, your moment is now. Seriously, you have more leverage than you've had in at least 2 years. If you're a seller, you have to be smart and price your home correctly from day one. The market has changed. And for investors, don't overthink it. Stick with the proven winners, multifamily and industrial. So as we look ahead to 2026, who's really going to win this real estate tug-of-war? Will this rising tide of new homes finally tip the scales in favor of buyers? Or will Queen's booming economy keep prices just out of reach? We'll have to wait and see. But one thing is absolutely certain. It's going to be fascinating to watch.